So I want to jump forward to this is a really interesting story because it points to it gets to the idea of the structure of things in a way. Can you briefly tell the story of Matthew Cooper front running the Anointers?
Oh, the best. This is the best.
This is awesome. I love this.
I mean, it's just like such a. I mean, this is one of the, in my opinion, one of the greatest entrepreneurial acts I've ever known. So,
I agree. I love it.
This is like a former Harvard Business School professor. I have like multiple students who have started multi-billion-dollar companies in the past, but none of them compare to Matthew Cooper and wine. So, Coop's story is. He's first off a super personable guy, and he does an undergraduate degree in Tulsa, Oklahoma, and becomes interested in wine, and then he goes to get a PhD in, of all fields, toxicology at the University of Kentucky. And when he's there, something happens. I won't go into that, but he gets really interested in wine. And so he starts, and this is the late 90s. And what's happening in California is like these boutique wineries in Silicon Valley are getting big. Like they're getting these like cult followings. So Coop goes out to Silicon Valley and meets a bunch of wineries, and he hears a rumor. And the rumor is that Robert Parker is going to go the following year to Australia to raid Australian wines for the first time. And like, this is shaping up to be a great year. Like all the weather conditions are right. Everybody's expecting like a really high quality crop of wines from Australia. But Robert Parker's never done this before. Okay. Sure. So part of the story is we have to talk about Robert Parker. There's a big part of the book where I talk about the Anointers. These are the prestigious actors that have credibility, legitimacy, respect in our society. And what they do is they transfer their prestige to other people. And we can come back and talk about that. But Robert Parker becomes by a mile the most important critic in the wine business. And what that means is every month he publishes this magazine called The Wine Advocate, and The Wine Advocate's got a bunch of wine ratings in it. And if you do well on The Wine Advocate, then you crush it in the market, right? So if he gives you a 97, then all of a sudden you gotta, your bottle of wine's it goes from $20 to $200 or something like that.
Sure.
So interestingly, there was this whole group of people who would try to get The Wine Advocate just before publication, right? Because if you could just get it hours before publication, then you go out and you buy all the highly rated wine, and then you can sell it at a huge markup, right? So everybody
you arb the market.
You arb the market. So it's like front running, like it's a guaranteed return. So everybody was trying to front run, like not everybody, but a bunch of people trying to front run the market by getting these ratings ahead of time and then trading on them. But Coop takes this like 7 levels ahead. So what Coop does is he's like, okay, well, this guy's going to go to Australia and he's going to rate wine. So what I'm going to do is figure out ahead of time what wines he's going to rate highly, which is to say Coop goes back to Kentucky, pulls out some old issues of the Wine Advocate. He acquires a bunch of bottles of wine, and then he starts tasting them. And he's already by now a very good taster. So, and what he's basically doing is learning Robert Parker palate. So he can then taste a bottle of wine and he'll say like 93, 97, 89, 99, 88, 97, 100. So he is basically learning what Robert Parker likes. He then goes to Australia, front runs Robert Parker, goes around the country, goes to all these like boutique vineyards no one's ever heard of, tastes the wine, figures out what he thinks Parker's going to like, and then buys it up. In fact, he buys so much wine that he has to rent a box shipping container on a cargo ship to move it all back to California. So he buys wine, he moves it back to California, he rents a 2-bedroom apartment in the Bay Area stash it to stash all the wine in it. He waits a couple months until the Wine Advocate issue of Rating Australia comes out, and then he's got the wine all queued up at auction, and he does something like a 7 or 8x on his investment, and it's just like it's this incredible story. So, but what that is it's the Rembrandt story in real life. It's like there's a bottle of wine. It's worth one thing the day before or the minute before the Wine Advocate comes out and rates it high, and it's worth something totally different the minute after it gets a good review. So if you can forecast that, you can arb it.
Yeah. Well, and so again, like I'm thinking about this, to your point earlier, like I'm always trying to learn a little about a lot. And as I'm thinking about some of these things, obviously there's a lot of markets related information that you're talking about that on its face, like that's a great story, but it's a markets related story. He was able to arb the market in a way. You mentioned this for a piece of your book, and you kind of dabble in it at other parts, but talk about some of these dynamics in the stock market. For example, as you note, the stock market's kind of like the social arena. What do we find on average? People are not very good at predicting the future. They're just not. And yet at the same time, to use a publication from one of your former schools, Buffett many years ago now wrote in the Columbia Business School, one of the publications there, he wrote about the super investors of Graham and Doddsville. And he talks about, what if you found all these monkeys that are flipping coins, and it just so happens that they flip it, however many times in a row, heads, and then you find out they're all, eating and drinking at the same place in Omaha, right? You'd kind of think, well, there might be something to that. So even in a market dynamic where at large humans are not good at it, and they're not going to call it ad alpha, as they say, yet there's still an anointed group even in a big market like that.
Yeah. So let me take this in a couple directions. Love the question.
Okay.
I mean, so first, let's go back to Robert Parker for a second, because you're totally right. Like, it's a market thing, but it's also, just to underscore the meta point of the book, it's a valuation thing, right? And
sure,
and
agree.
And I want to take listeners back to this idea that you literally have the same product, but its value shifts radically in just in the snap of a finger when one person says this is good. Like, and that's anointment. It's like, it's a bottle of wine is worth way less until Robert Parker blesses it. And that's why he was the king. He was considered the kingmaker of the business. So, the stock market, if only I understood this better, or could forecast it better. But what's a fun market right now when you're thinking about status dynamics is crypto, right? So we now see this like multi-trillion dollar, right? So the crypto market is a multi-trillion dollar market. Now think about a meme coin, for example. Like, why? I mean, we could surely have, and we could probably do 27 episodes on why Dogecoin is worth something, but Dogecoin is worth a lot. Like, I mean, I don't know what today's market cap of Dogecoin is, but it's in the many billions, and it's a meme coin, right? It has no value. We don't even pretend that it has value. It's this weird collectible. And the history of Dogecoin is like, it's Elon Musk, and it's Snoop Dogg, and it's Michael Dell, and it's whoever got involved in the Dogecoin thing. But these are all like high status, highly visible people who bless something, and then it acquires a ton of value. And it's even better because they hold a bunch of it when they bless it. And so they're creating value for themselves by blessing it. In the market, it's always been my belief that fundamentals don't explain very much, or they don't explain. I mean, they explain some fraction of the market, but certainly not nearly all of it. I live in the tech world, which is a world of fads and fashions, and could be's, would be's, and ifs, and the movement of equity values in that world, particularly in the private markets, right? And so I think you think probably a lot about the stock markets. I live much more in the private markets because, I work in the world of venture capital backed entrepreneurship. And
Sure.
there, boy, I'll tell you, valuation is so much of an anointment dynamic versus a fundamentals dynamic.
Well, to your point, I mean, in that world, who you take a check from really matters. No one's going to go back and be like, well, who bought your stock today? Right? I mean, that's just not, that's a public market thing versus a private market. If you get money from Sequoia, it's pretty much guaranteed you're going to $1 billion valuation over time.
Yeah, and less and less and less. The person who bought your stock today was Warren Buffett.
Oh, great. And I thought a lot about Buffett as we were talking about some of these dynamics. Also, because once you go to an anointed status, it's like, oh, that's where Buffett eats his cheeseburger. That's where he goes to a steakhouse. That's the plane company that Buffett flies. It becomes this like you talked about Kobe. Did Kobe deserve to go to all those All-Star games? No, but it's Kobe Bryant. He's anointed, and therefore he goes to the All-Star game.
Correct.